When you look at the chart for Nvidia, Paul, is it as hot? What do you see?
Yeah, I mean, when you look at, I like to look at the weekly chart, but when you look at the weekly chart, when you look at the RSI, there's definitely a negative RSI building. The MACD's kind of peaked out back in, July, but the stock has kind of traded higher. So, and like I said, this looks like it's got a nice Elliott wave, 5-wave pattern unfolding. I think it's still got some more upside left, maybe up into the 172 area. But I do think that you may see 2025 this year where you do see some consolidation in the stock, maybe around in the 110 to 130 area. That doesn't mean that I don't think they're going to stop being dominant, but any stock, it exhausts and has to rest at some point. So, I would I would look at this as I do think it's a good spot to, if you don't have a position near a trader, to initiate a position. But like I said, I still think the stock has more upside left.
All right. Like the charts, like the analysis. Thanks, Paul. Good perspective.
The stock of Nvidia saw notable increases during Friday's trade. The share price of the leader in artificial intelligence, AI, ended the day's trading session up 4.5%. In the meantime, the Nasdaq Composite Index gained 1.7% and the S&P 500 Index gained 1.2%. Following reports of Microsoft's anticipated 2025 expenditures on AI infrastructure, Nvidia's stock saw upward momentum in today's trade. More sophisticated graphics processing units, GPUs, are bought from the semiconductor expert by Microsoft than by any other significant tech company, making it its biggest client. Following today's advances, Nvidia's stock has now increased by 200% in the past year. Naturally, the amazing performance of Nvidia's stock makes one wonder if investors may still make big gains with the leader in AI. However, the company's high-performance GPUs remain the fundamental hardware that drives sophisticated AI applications, and the chip leader continues to hold a significant competitive advantage in the market. In the rapidly expanding AI chip market, the majority of analysts estimate that the company holds a minimum of 80% of the market. When it comes to the most significant and lucrative segments of the AI chip market, Nvidia appears to hold a market share well above 90%, depending on how the category is broken down. In light of this market domination, Microsoft's recent remarks appear to be highly optimistic for Nvidia. Brad Smith, the president and vice chair of Microsoft, stated in a recent interview that the business intends to spend about $80 billion on AI data centers this year. The software giant's spending on AI infrastructure is predicted to rise by at least 51% in 2025, with capital expenditures, CapEx, of over $53 billion in 2024. Growth in AI data center investments could be much higher than the 2024 CapEx number, which included expenditure on a few other areas. Nvidia appears to be the main benefactor of this. Nvidia's stock outlook has become more speculative due to the company's historically cyclical nature and massive stock gains. But Microsoft's recent remarks are a very encouraging indication. Long-term investors may find Nvidia stock to be a good investment, given indications that the need for hardware to develop AI infrastructure is still growing quickly. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Price looking pretty solid still with the uptrend, but that bearish divergence, bit daunting. What's the approach, you think, Tom?
Well, you look at the implied volatility levels. It started to at least consolidate above 130. It's made its way back up above 140 again also. IV percentile rank of about 24%, so in the lower 1/4 of where implied volatility levels are over the last 52 weeks. So what type of strategy works to the upside in that? Well, I looked at a call vertical where I can offset some of my risk on this position that's bullish. So looked at the January 31st weekly cycle. So I've got, just about 28 days in this position, about a month. Avoids earnings that come later on in February. But it takes advantage of upside where I'm going to buy the 140 strike call. And then against it, I'm going to sell the 152.5 strike call. So a bullish $12.5 wide call vertical to the upside. Paying roughly about, I've got a $5 debit here on my risk profile, but I think it's trading closer to $5.40 now. The stock has continued to move higher. But if you pay a $5 debit for it, That's your risk, $500. That can expand to $12.50 if it goes back to those all-time highs of about 152.5 here. So you got a good risk-reward setup. The break-even, if you pay $5, going to be 145. That's less than 2% above the current share price in Nvidia. So taking that directional bias while offsetting some of the costs on it, because if you just buy the 140 strike call, you got a lot of extrinsic option premium in that, where it takes that break even to the upside where you need to go for profitability up a little bit higher. By selling the 152.5 call against it, you're lowering that break even and your risk on this position.
All right, so you're using the vertical again, but you're owning it this time. Buying it, owning it.
Because of the low implied volatility level.
Because it's cheaper.
Yeah.
Yep. All right, fair enough. Because
Two very successful hedge fund managers aggressively bought and sold Nvidia, which is up 4.45%, and Apple, which is down 0.20%, two of the most popular stocks among individual and institutional investors in the third quarter. Citadel Advisors' Ken Griffin almost tripled his investment in Nvidia by acquiring 4.7 million shares. With options excluded, it is currently his third largest position. Additionally, he reduced his ownership in Apple by 90% by selling 4.9 million shares. With options excluded, it had been his fourth largest position. .72 Asset Management's Stephen Cohen increased his ownership of Nvidia by 75% by purchasing 1.5 million shares. With options excluded, it is currently his largest position. In the meantime, he fully unloaded his holding in Apple by selling 1.5 million shares. Crucially, Griffin and Cohen are excellent sources of inspiration because they are among the most prosperous hedge fund managers in history. However, investors should always conduct research before purchasing or disposing of a stock. Graphics processing units, GPUs, are the most well-known product of the accelerated computing business Nvidia. In terms of sales and shipments, it holds a 98% market dominance in data center GPUs. These chips are frequently used to accelerate computationally demanding tasks, such as running artificial intelligence, AI applications, and training big language models. NVIDIA GPUs are, in fact, the industry standard for AI computation. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now let's dive into today's video.
First, let's get to our first trade of the day, and that is Nvidia. The paper money trade we're looking at here in Nvidia. Remember, a couple things about Nvidia. If you look at a one-year chart, Nvidia hit $140 for the first time June 2nd of last year. So if you look at a chart since then, you can make a pretty strong case that Nvidia, despite big beats in earnings, big beats in revenue, beats in raises, has been flat this whole time. It just went through $140 today. It closed yesterday below the $140 mark. So it has been relatively flat for 6 full months. So now it has gone back through $140. And as we get to the new year, things may be perking up a little bit for Nvidia. So the paper money trade we looked at here was something in the diagonal family, giving you, some deltas in Nvidia. So I went out to the January 24th expiration, bought the 145 call slightly out of the money, and then sold the January 10th 150 call. So doing the 145, 150 call diagonal, that we have it in there about $4.20. It's trading about $4.05. So the stock has backed off from its rally today. So it's trading pretty close to $4. And you could do this $5 call diagonal. Remember, it's January 10th to January 1st. It's about a 2-week trade here. It's next week is what you're short. You're long about 3 weeks out. So January 24th to January 10th, buying the 145, selling the 150 call, spending right between $4 and $4.20. That's the risk on the trade, is the debit paid here. As you can see, your target for that strike at next week's expiration, $150 in Nvidia. So you're looking for a move back up towards 150. Remember, the recent high 152.89. So you're looking for something at or near, getting up close to the recent all-time high in Nvidia. So a bullish call diagonal in Nvidia.
However, the company's ability to construct complete data centers makes it genuinely formidable. Its GPUs are complemented by CPUs, networking equipment, and interconnects. In order to assist programmers in creating GPU-accelerated apps, Nvidia has also established a strong ecosystem of development tools. The business is now the world's de facto enabler of AI, according to Susquehanna analyst Chris Rolland, as a result of its vertical integration. Because Nvidia's stock has increased 800% over the previous 2 years, a time when there has been a huge demand for AI accelerators, investors frequently believe the company is overpriced. However, shares are already trading at 52 times earnings, which is less than the January 2023 multiple of 62 times earnings. Furthermore, considering that Wall Street projects Nvidia's earnings to increase at a rate of 38% per year over the next 3 years, the current pricing is extremely fair. Purchasing this stock now should be easy for long-term investors. Nvidia may still outperform the S&P 500, a GSPC 1.26%, over the next 5 years, but the chances of another 800% gain in the next 24 months are extremely low, if not non-existent. For my part, I would purchase additional shares when the price drops after beginning with a modest position today. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.